The essence of IAS 40 investment property. Investment property is the property held to earn rentals or for capital appreciation or both, rather than for use in production or supply of goods or services, or for administrative purposes, or sale in the ordinary course of business. The property can be land and building or part of land and building or both. It can be held by owner or by lessee as a ROU asset. The following are not investment property, like the property held for sale in the ordinary course of business or in the process of construction or development for such sale. Owner-occupied property, including property held for future use as owner-occupied property. Property held for future development and subsequent use as owner-occupied property. Property occupied by employees and owner-occupied property awaiting disposal. Also, the property leased to another entity under a finance lease is also not an investment property. So there are two recognition criteria. The first is it is probable that future economic benefits will flow to the entity relating to the asset. And second, the cost can be measured reliably. These criteria are the same as IAS 16 and IAS 38. Initial measurement. It is at cost, including directly attributable expenditure and transaction costs. Subsequent measurement. Whatever policy an entity chooses should be applied to all of its investment property. There are two models. The first is fair value model, under which any change in fair value is reported to profit and loss and the investment property is not depreciated. Under cost model, it is the same as under IAS 16. You can watch the summary of IAS 16 by clicking on the I button above. Coming to transfers to or from investment property. Well, this happens when there is a change in use. Change in use of an investment property occurs when the property meets or ceases to meet the definition of investment property and there is evidence of change in use. Like owner occupation commences, so the investment property will be treated under IAS 16. You must note that in isolation, a change in management's intentions for the use of a property does not provide evidence of a change in use. Coming to accounting treatment in case of transfers. The first, transfers from investment property to owner-occupied or inventories. The cost for subsequent accounting is fair value at the date of change in use. And apply IAS 16 or IAS 2 or IFRS 16 as appropriate after the date of change in use. The second, in case of transfers from owner-occupied to investment property. Then we have to apply IAS 16 or IFRS 16 up to the date of change in use. At the date of change, property is revalued to fair value. Also, at the date of change, any difference between the carrying amount and its fair value is treated as a revaluation under IAS 16. And of course, after the date of change, the property will be treated under IAS 40. Disposals. Any gain or loss on disposals of investment property is the difference between the net disposal proceeds and the carrying amount of the asset. It should be recognized as income or expense in profit or loss, unless IFRS 16 requires otherwise on a sales and leaseback.